I want to go over one of the most common mortgage confusions that come up, and that's pre-approvals, rate holds, pre-qualification. What do all of those things mean? People use these words like they're the same thing, but they're not, and mixing them up can lead to two problems. One, buying with a budget that isn't actually what you can qualify for, or two, thinking that your purchase is protected when it's not. So what is a pre-approval? In plain language, a pre-approval is an upfront review of the estimates. It's usually how much you might be able to borrow and what your payment could look like and what a lender might be comfortable with based off of the information that you provide today. And it's helpful because it gives you direction, but here's what it isn't. It's not a guarantee of final approval. It's not a promise that the property will qualify either. And it's not a promise that your rate is locked in unless a rate hold is actually attached and confirmed. Think of a pre-approval like a financial snapshot. If the snapshot changes, like your debts, your income, or your credit score, even your down payment or the source of that down payment, or any of the property details, which in most cases is assumed in the early stages, the outcome can change too. Now, if we're talking about a rate hold, it's a lender saying for a set period of time, we'll hold a rate or the rate change for you if you qualify when it's time to finalize. And that last part matters because you still need to qualify at closing and the deal still needs to fit with the lender's rules. Rate holds are about protecting you from rising rates, not guaranteeing a final approval. However, it is worth noting that rising interest rates could impact your ability to get approved. Different lenders have different policies, how long the rate hold lasts, whether there's a float down option if rates drop, and what conditions need to be met. Now, some examples of what can change between today and your closing day is your income picture, if you change jobs, if you switch from salaried to self-employed, if you go on leave or your hours change, your approval can change as well. Your debt and credit, a new car loan, new credit cards, your financing for furniture, things like that. This can shift your ratios and can shift your credit score as well. And some lenders will want to do an updated credit check when your file goes live. And then there's other things like the property, the condo status, rental property rules, the appraisal value, or even the property type can change what a lender will do. On top of that, there's the documents itself. A pre-approval is often based on what you tell us, plus some documents. Final approval is based on verification. Lenders can be strict about what they accept. So the safe way to think about this is pre-approval equals direction, a rate hold equals protection against rate increases, and the final approval equals the verification plus the property review plus all the conditions of approval are met. And here's what I typically do with clients. I start with a real budget, not just their maximum. Just because a lender might approve one number doesn't mean that that number feels good monthly for you. We look to build a comfortable payment number first. Second, we clarify what you actually receive. Is there a rate hold included? What's the expiry date? What conditions or documents are still required? What could cause the rate or approval to change? And third, I match the strategy to your timeline. If you're buying soon, you want tighter numbers and document verification earlier on. If you're shopping longer, you still want a plan, but we keep it flexible and update as things change. And fourth, we protect your approval while you shop. The biggest rule is don't change your debt picture unless we talk first. No big financing moves, no new credit lines. And if your job changes, tell me early so we can adjust the strategy accordingly. So here's a few quick examples. Let's say you're a first-time home buyer. A pre-approval helps you set a realistic budget and the shopping range. The rate hold is useful if you're worried about rates that could rise before you buy. Keep in mind, not all lenders provide pre-approvals, and some will only provide a rate hold when you have an accepted offer to purchase. Let's say you're self-employed or commissioned. A pre-approval is still possible, but the quality of that pre-approval depends heavily on the document review. You'll want to verify most of that early on. So we might ask for a lot of documents earlier on in the process. Now, if you're buying a new build or you have a long expected closing because you're in the early stages of your planning, rate holds become extra important. But we also plan for what happens if the closing date moves. So if you take away one thing from this, pre-approval tells you your direction, rate hold protects you from rate increases, and neither one replaces a final approval.